Welcome to our guide on robo-advisors and automated investment management. In today's digital age, investing has become more accessible than ever before. Robo-advisors represent a revolutionary approach to managing your investments using technology and algorithms. Throughout this presentation, you'll learn what robo-advisors are, how they work, their benefits and limitations, and most importantly, when they might be the right choice for your investment journey. A robo-advisor is a digital platform that provides automated, algorithm-driven financial planning and investment services with minimal human supervision. Think of it as a computer program that manages your investments for you. These platforms are built on three core principles. First, they're algorithm-based, meaning they use mathematical formulas and data to make investment decisions. Second, they're low-cost, typically charging much less than traditional financial advisors. And third, they're accessible 24/7, allowing you to check and manage your investments anytime, anywhere through your computer or smartphone. The robo-advisor process follows three simple steps. Step 1 is the questionnaire phase. When you sign up, you'll answer a series of questions about your financial goals, investment timeline, and how much risk you're comfortable taking. Step 2 involves algorithm analysis. The system takes your answers and uses sophisticated algorithms to create a personalized investment portfolio tailored to your specific needs. Step 3 is automated management. Once your portfolio is set up, the robo-advisor continuously monitors your investments and automatically rebalances them to maintain your target allocation. This means you don't have to worry about constantly adjusting your investments yourself. Robo-advisors rely on several key algorithms to manage your money effectively. Modern portfolio theory is the foundation, which optimizes how your assets are allocated to maximize returns for your specific risk level. Rebalancing logic automatically adjusts your portfolio to maintain your target asset allocation as markets fluctuate. Tax loss harvesting is a clever strategy where the system sells losing investments to offset capital gains, potentially reducing your tax bill. Finally, risk assessment algorithms analyze your investor profile to determine the appropriate level of risk for your situation. These algorithms work together around the clock to manage your investments efficiently. Robo-advisors offer several compelling advantages. Lower fees are a major benefit, typically charging 0.25 to 0.5% annually compared to 1 to 2% for human advisors. They have low minimums, allowing you to start investing with as little as $500 or even less. You get 24/7 access to monitor and manage your investments whenever it's convenient for you. They remove emotions from investment decisions, which helps prevent panic selling during market downturns. Fast setup means you can create an account in just minutes rather than hours. And transparency ensures you always have a clear view of your holdings, fees, and performance. These benefits make investing more accessible and affordable for everyone. While robo-advisors have many advantages, they also have limitations you should understand. Limited personalization means they cannot account for complex financial situations or unique circumstances that might require special attention. There's no human touch, so you won't have someone to call during periods of market volatility or major life changes who can provide reassurance and guidance. Limited services mean most robo-advisors don't offer comprehensive estate planning, insurance advice, or tax preparation services. They're also technology dependent, relying on algorithms that may not adapt well to unprecedented market events or situations the algorithm wasn't designed to handle. Understanding these limitations helps you make an informed decision about whether a robo-advisor is right for you. Let's look at some popular robo-advisor platforms you might consider. Betterment requires no minimum investment and charges 0.25% annually, making it great for beginners. Wealthfront has a $500 minimum and also charges 0.25% with advanced tax strategies. Vanguard Digital requires $3,000 to start, but offers the lowest fee at 0.15%, backed by their renowned low-cost index funds. M1 Finance has just a $100 minimum and offers a free basic plan with customizable portfolios. SoFi Invest has no minimum investment and provides free automated investing along with career coaching. Schwab Intelligent requires $5,000 but offers a free basic tier with the option to add human advisor access. Each platform has its own strengths, so choose based on your needs and budget. Robo-Advisors work well in several situations. They're excellent for beginning investors who are starting with limited capital and want diversified portfolios without needing deep investment knowledge. If you have simple goals like saving for retirement or general wealth accumulation, a robo-advisor can handle these straightforward objectives efficiently. Those who prefer a hands-off approach and don't want to actively manage their investments will appreciate the automated management. Cost-conscious investors who want professional-quality portfolio management at lower fees than traditional advisors will find robo-advisors particularly attractive. If any of these situations describe you, a robo-advisor could be an excellent choice for managing your investments. However, there are situations where a human financial advisor may serve you better. If you have complex finances involving multiple income sources, business ownership, or intricate tax situations, the personalized attention of a human advisor becomes valuable. Those needing comprehensive estate planning, including trusts or sophisticated inheritance strategies, require expertise that goes beyond what algorithms can provide. If you prefer personal guidance with face-to-face interaction and customized financial advice tailored to your unique situation, a human touch is irreplaceable. High net worth individuals with significant assets often benefit from sophisticated wealth management strategies that require human expertise and judgment. In these scenarios, the higher cost of a human advisor may be worthwhile. Let's recap the key points about robo-advisors. Robo-advisors provide low-cost, automated investment management using sophisticated algorithms to build and maintain your portfolio. They're best suited for beginners, investors with simple goals, and cost-conscious individuals who want professional management without high fees. However, consider human advisors for complex finances, estate planning needs, or when you want personalized guidance and a human relationship. The most important step is to evaluate your own financial situation, goals, and preferences to choose the right approach. Whether you select a robo-advisor, a human advisor, or a combination of both, the key is to start investing and stay committed to your long-term financial goals. Thank you for watching, and happy investing.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.